Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Netflix Inc. quarterly report. Netflix provides the following services. The company offers a wide range of entertainment options, including television series, documentaries, feature films, games across various genres and languages. These services are available for streaming on multiple devices, such as TVS digital video players, TV set-top boxes, mobile devices. Netflix operates in approximately 190 countries worldwide. The Netflix Inc. stock price has increased significantly over the past year, exceeding 47.42%, driven by strong financial results and strategic pricing adjustments. Key factors contributing to this rise include robust subscriber growth, improved profit margins, and increased subscription prices in Q4 2024 and Cone 2025 earnings reports. The success of Netflix's advertising-supported tier has also been a major driver of growth, with ad revenue doubling in 2024 and projected to double again in 2025. Additionally, the company's diverse content library and expansion into live events have bolstered engagement and overall revenue. While there was a decline in Q3 2025 due to an unexpected tax charge, the overall performance of the stock has shown a significant upward trajectory over the past year. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary. Revenue growth is primarily driven by regional expansion, with Asia-Pacific (APAC) experiencing the highest growth rate at 23%. The United States and Canada (UCAN), Europe, Middle East and Africa (EMEA), and Latin America (LATAM) regions also reported significant revenue growth, ranging from 14% to 21.3%. In contrast, the primary drivers of revenue decline are not explicitly stated in the summary. However, some factors that may have contributed to the increase in cost of revenues and sales and marketing expenses include a 20% and 10% increase in other cost of revenues for Q3 and YTD, respectively, as well as a 10% growth in general and administrative expenses. Net income and profit margins. A changing landscape, the financial performance of a company has undergone significant changes over the past year. Net income has shown an upward trend, increasing by 8% in Q3 2025 compared to Q3 2024, and by 25% for the first 9 months of 2025 compared to the same period in 2024. This growth is evident in the $183 million increase in net income for the 3 months ended September 30, 2025. However, profit margins have presented a mixed picture. Operating income margin decreased by 1.4 percentage points to 28.2% in Q3 2025 compared to Q3 2024, indicating a decline in profitability during this quarter. In contrast, for the first 9 months of 2025, operating income margin increased by 3 percentage points to 31.3%, suggesting an improvement in profitability over the longer term. The conflicting information regarding profit margins highlights the complexity of financial performance and the need for careful analysis. Nevertheless, it is clear that net income has shown significant growth, while profit margins have presented a more nuanced picture, with both decline and increase depending on the time frame considered. The company is indeed generating positive operating cash flow. This is evident from the financial summary, which highlights a net cash provided by operating activities of $2,825,174 for the 3-month period and $8,037,631 for the 9-month period ended September 30, 2025. These figures indicate that the company's operations are generating sufficient cash to cover its expenses, resulting in a positive operating cash flow. The company's debt level has undergone significant changes over the past year. While short-term debt decreased substantially from $1.78 billion to zero, long-term debt increased by $664 million. Consequently, total debt rose from $23.76 billion in December 2024 to $24.49 billion in September 2025. In terms of interest expenses, there has been a notable decrease. Net interest expenses dropped from -$206.52 million in 2024 to -$138.84 million in 2025. Additionally, interest expense for the first 3 months of 2025 was lower than the same period in 2024, and the trend continued through the first 9 months of 2025. Overall, while total debt has increased slightly, the The decrease in interest expenses suggests that the company is managing its debt more efficiently. Management is emphasizing a long-term growth strategy, focusing on preserving capital and liquidity while driving financial performance through improved content offerings and services. Key objectives include growing the business globally within an operating margin target, increasing revenue through membership growth, price increases, and advertising revenue, with a focus on Asia-Pacific. Effective debt management and investment in global content are also crucial to achieving these goals. The company's financial summary reveals that while it has engaged in some form of shareholder return, the specifics are not entirely clear. One notable action is that the company has bought back shares, indicating a commitment to returning value to its investors through this means. However, there is no information provided regarding dividend payments, leaving this aspect of shareholder returns unclear. That concludes the financial summary for Netflix Inc. Feel free to comment below, and I will be happy to answer them when possible.